Welcome to the first video of Introduction to Financial Accounting. You might be a high school student or a college student, or maybe someone with some general interest in learning more about accounting. So I'm going to guess that the first question which popped in your head before you even clicked on this video is, what exactly is accounting? Well, I'm going to guess that you probably already have a little bit of an idea what accounting is. You probably might have heard of an accountant before. An accountant practices accounting as a profession. You know, an accountant files taxes, or maybe you know that accountant definitely deals with lots of data and numbers, monetary numbers and data. So accounting definitely deals with taxes and numbers and data, but let's look at a more formal definition to understand what exactly accounting is. So accounting, it is a process to identify and record economic transactions. So some of these new terms, such as economic transactions, we'll definitely talk about them once we're done defining what accounting is. Record economic transactions and provide financial information to its users. So I'm going to assume that three terms are going to particularly jump at you, which are what is an economic transaction, what's financial information, and who are users. And these are all great questions. So let's first start with economic transaction. An economic transaction, or simply known as an economic event, is basically a happening of economic consequence. So that suggests economic activity, and that's exactly what it is. So let's look at a simple example to understand what an economic event is. So a good example would be buying a piece of land. Piece of land for an amount of money, in this case, $100,000. That's definitely suggests economic activity, and there is some economic consequence involved here, because you're $100,000 short of cash, but in exchange, you have a piece of land, an acre of land, in this case, which represents property, which is worth $100,000. Financial information. Financial information, you might already have an idea of what financial information is. It's simply monetary data about a person or an organization. So I want to clarify that in these series of videos, which I'm going to be putting up on YouTube, we're just going to be dealing mostly with organizations and not persons. We are going to be talking about persons generally, but mostly we're going to be dealing with organizations. And finally, users. You might have already guessed that these users are people or entities who want access to monetary data of an organization. And you're correct. You might already even have thought of some examples, such as who might need monetary data of an organization? Perhaps an owner of the company, or banks before they give out a loan to the company. And you're right, if these are some of the guesses you've made already. But more generally, users can be broken down into two specific types. One's internal, while the other one is external. Both the terms are kind of self-explanatory. Internal users are users within the organization who want access to more specific, more timely, and more detailed information. Some examples of internal users are employees and managers who work within the organization, or board of directors, or finance directors. All these internal users want access to more specific, more detailed information. External users are simply users outside of the organization who want access to some monetary data as well. More importantly, they get access to more general data rather than more detailed or specific data, as in the case of the internal users. Some of the examples of external users will be creditors, such as banks or suppliers. So banks and suppliers, they want access to monetary data before they give out loans because they want to ensure that the company is performing well enough financially to pay them back. Another example will be investors or owners. Another example would be government. Government, such as its organizations such as IRS or SEC, Internal Revenue Service, and Securities Exchange Commission, might want access to some monetary data about the organization. Another question which might have confused you would be, why are investors, who are also the owners of the organization, not really part of the internal users when they are the owners? Shouldn't they have more access to more detailed, more specific data? And that's a valid question. But in fact, there's other forms of organizations, such as a proprietorship or a partnership. A proprietorship is simply an organization with a single owner, while a partnership has two or more owners. And because they are the owners of the organization, and they can, in fact, demand access to more specific and detailed information from their managers. But as I mentioned earlier, we're going to be looking at more bigger organizations, such as corporations. As in the case of Apple, even if you own a single share of Apple, you are still an investor or an owner of Apple. Do you think it's fair to have access to all information, all internal data? This data could be really sensitive. It could be a new product which hasn't even been announced yet. And it's much more for the better of the company that such sensitive data be in more capable hands of internal users such as managers rather than investors themselves, technically the owners of the organization, because the managers can use this timely data and sensitive data to better help the company than investors themselves.